Good morning, everybody. I'm here again with my colleague, Mike Angelucci, CFP, MBA. This is Mike Hebern, the COO of Level Financial. And today, Mike, we're going to talk about I-bonds and specifically what are I-bonds and probably more importantly, why are we talking about I-bonds this close to the new year? So over to you. Tell us all about I-bonds.
Great question. I-bonds are traditional savings bonds that most people are familiar with, that maybe they got as gifts or they bought as part of a savings program. They're U.S. government savings bonds, but the unique part about I-bonds are they pay a fixed rate of interest and a rate of interest based on inflation. So that's why they're important right now.
Okay, so the fixed rate is fixed across the life of the bond, and then the variable is also on top of that? Is that
Correct.
Tell us a little bit about how that works.
Correct. Current I-bonds right now have a 0% fixed rate.
Oh, sounds attractive.
It does.
Good thing there's a variable rate to go with it.
It doesn't until you look at the variable rate, which was issued this past November.
Okay.
And that variable rate for the next 6 months is 7.12%.
Okay.
And it's guaranteed by the U.S. government.
Okay.
So there's a couple stipulations that a rate could change in May. The government every 6 months will issue a new rate. So it could go down, it could go up. If inflation goes up, that rate will go up and you'll start earning more money.
So it moves with inflation.
Yes.
And when we say it moves with inflation, is it what index are they using? Is it year-over-year inflation? Is it quarterly inflation? Do you know what they're using to measure or to set the rate?
I believe they're using the annual CPI that the government issues.
Okay.
Yeah.
So it's tied to the economy in some
exactly,
way. So
yes.
if inflation continues to increase, that variable rate will increase with it. And likely, eventually, someday, even though I think we're finding that inflation probably isn't transitory, once it someday comes down, then that rate would come down with it.
Correct.
Okay.
Correct. So the one of the things right now that is important for people, if you have some savings, you have some cash, you've been holding it in a savings account, probably not earning very much at all, if anything, and you've been wondering, what can I do with my cash? Because if inflation is 7%, you're losing 7% of purchasing power every year just by holding that money in a bank account. So I-bonds you can buy up to $10,000 worth of I-bonds every calendar year. So they're nice in that they adjust with inflation, but they're limited as far as how much in a calendar year you can buy. But the important thing right now is if you buy 10,000 before December 31st, you're going to get 6 months worth of interest at 7.12. So
so you have 10 days.
You got 10 days.
Okay.
But then you could buy another 10,000 before April of next year of 2022 and still get another 7.12% for another 6 months from the date you buy it.
So you could buy 10,000 on December 31st.
Yes.
And then on January 2nd or 3rd, whatever the next
Correct.
business day is,
Yes.
you could buy 10,000 more.
Another 10,000.
Okay.
Exactly. And what I've said to some clients is even if the government adjusts that rate back to zero, for the next year you're going to get 3.56%. So it's multiple times.
So explain that number. That's basically the 7.12 divided by 2.
Right.
Okay.
Right.
I gotcha.
Exactly.
I gotcha.
And the interesting thing is that even though the government changes the interest rate every 6 months, when you buy it, are going to get the interest rate that was issued at the time for 6 months. So even if you buy some more I-bonds in February or March, you're still going to get the 7.12 for another 6 months, and then you'll get whatever the next interest rate is going forward.
So I see in my notes here, though, that you got to hold on to it for at least 1 year.
Yes, great question. The only caveat, the gotcha, I guess, is that you have to hold I-bonds for 1 year. If you hold them between 1 and 5 years and cash them in, you lose 1 quarter or 3 months worth of interest. Still not a bad deal. And then after 5 years, you can cash them in at any time. The other thing about owning the I-bonds is to get the $10,000, you have to buy them directly through the U.S. Treasury Department at U.S. Treasury .com.
Okay.
So maybe we'll
That's the
put
only place you could buy them.
Correct.
Is on USTreasury.com. We'll put the link up there.
Right. We can't do it for clients. You
Okay.
can't go to your bank and buy them. The other way to get I bonds is you're allowed to buy 5,000 in paper bonds every year with your tax return, and there is a form.
Okay, let's stop there just for 1 second though. So a paper bond versus an I bond. Tell me quick
Great.
about that.
Yes, they're both I bonds. One is just an electronic form that is housed at the U.S. Treasury Department electronically,
Okay.
and the other is a paper bond, like most people are used to with the old Series E bonds,
Right.
that you'll
Little
get and hold,
piece of
and
paper that
little
you
piece
stick
of
in your
paper.
safe or okay.
Exactly.
All right.
So you can buy up to $5,000 worth of I bonds when you do your tax returns as well next year. So when you do that, and if you have a return, you can file Form 8888, which will allow you to buy I bonds with your tax return. So a married couple, because I bonds are limited to $10,000 per year per Social Security number and $5,000 a year per Social Security number for paper bonds, a married couple could theoretically buy $30,000 worth of I bonds a year if they elected to, if they had that much cash. Even for people that don't have a lot of cash, I had a client that recently bought a $1,000 I bond for a Christmas present for her
All
grandson.
right, well, it's that time of
It's
year,
that time
right?
of year.
So fill the stockings with I bonds and
Exactly.
paper bonds, and
It's-
everybody will have will enjoy some interest, I guess.
And you can buy them as gifts. They have on the website, they have a nice area that will walk you through buying it for a gift. You'll need the beneficiary's Social Security number and
Okay.
set them up with the U.S. Treasury direct account, but you can buy other people the I bonds if you want.
Okay, great. Well, good information, especially this time of year. We're in the home stretch. If you have questions about this and you have specific questions, invite you to send an email to invest@levelfa.com. We'll make sure that Mike or one of our other advisors gets that question and gets right back to you. In the meantime, everybody have a happy holiday and a happy new year.
Absolutely.
This is Mike and Mike.
Thank you.
Thanks for listening.
Take care.